Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as VRTrader.com. He was the #1 U.S. stock market timer in the January 2020 edition of Timer Digest. He's speaking to us from Arizona. Welcome back to the show, Mark.
My pleasure, Jim. Thank you for having me.
Mark, does it look like the stock markets are bottoming, or are they likely going to fall for a lot longer and a lot further?
Well, I guess I would have to go a lot lower and a lot further, only because we haven't gotten any confirmation of a low yet. On a trading basis, I'm a little bullish. I think that we hit some support here in the 19,000 zone in the Dow Industrials and 2,300 area in the S&P. And I had some short-term cycles. We talked about these last week. So, you might see a little bit more of a bounce here. I'm a little concerned that they're closing the floor of the New York Stock Exchange next week, but professional traders are saying, well, it's all electronic and it doesn't make a difference. But I think that makes, investors, a little bit nervous that perhaps they should not be in the market if the big exchange is closed. But we'll see if that is, connection at all. But I did a comparison in my newsletter. I think we talked about this previously. We compare the correction we saw back in 2008 and 9, and the same amount of decline percentage-wise applied to the current decline. We bring the Dow Industrials down to about the 16,000 level, and we got to about the 19,000 plus level. So theoretically, as bad as it may seem, it's not as bad as it was in 2008 and 9, and maybe in terms of speed of it, maybe it's a little bit faster this time. And back then, it took a little time for it to bottom. You had a big bottom, rallied, came down again, so it took, several weeks before it unfolded. So if you're doing technical work like I am, I don't think we're looking necessarily at a V bottom. I think that might be one of your other questions as well. But, I think, markets could explode out of a low, but whether that happens as quickly as we saw back in 2008 and 9, only time will tell. So the bottom line is a little bit trading bullish here. We had some nice bounces. We were buying last couple of days some stocks like Tesla and Disney and the index and, a few other things that got slammed, and they all bounced here in the last 24, 48 hours. So, maybe there's a little bit more, maybe not, but, it was tradable, and at the moment I'm just viewing it as a technical rally subject to further evidence.
Mm-hmm. If President Trump was to reinstate the uptick rule, would this stock market carnage end?
I'm not really sure what impact it has anymore, Jim. I know there's been a lot of complaints that there's too much volatility in the market, that we don't have the uptick rule, but I think so much of the industry is so used to not having it, putting it back in again. That might create more of a liquidity problem for a lot of the funds that hedge their positions and so forth. It might prevent, in one sense, a decline. I guess you say you need the uptick to get short, but it might just force more selling from people saying, "Hey, I'm just going to get out if I can't hedge myself. I'm just going to dump everything." It might be worse for the markets. So we've done pretty well in the last 10 years without it. And the markets moved higher, and just because we had a sharp sell-off here, it doesn't mean that was the cause for the sell-off. So I think people are reaching a little bit. They're looking for an excuse to blame something or somebody. I mean, the market came down because it was overvalued to begin with. I turned bearish at the end of December. We knew something would, trigger a decline, whether it be a black swan event like we just saw. It was impossible to predict. I was looking for maybe a couple 10-15% corrections during the course of the year when I was asked what I thought the year would be like. So that it became a little bit bigger and better, I suppose. But outside of that, I think leaving the rules the way they are is best.
Now, of course, we've heard the coronavirus is or probably is a black swan event. So how do markets usually recover from black swans?
I don't have that much experience with it. I lived through 1987 and of course 2008 and 9. I guess they worked their way out of it. 2087 took time. We came out of it a little bit, but it was actually a couple of years of sideways action before. It's actually several years before it started building some upside momentum. Of course, we didn't have the volatility then as we have now. I guess it'll be news of some kind. Back in 2008-9, we had all liquidity come in. Federal Reserve, supported the market back then, and we just started to work our way out of it with support, with the money printing game, QE and all the things that the government provided for the markets, the bailout of the banks, and so forth and so on. This time, I guess it's just somebody supposedly finds a cure for the virus. Whether that's really true or not, time will tell. Whether it recurs again next season, whether it's really curable. We don't know all the details of this virus, but I think that virus cure story will probably be enough to at least to get the market moving again. So let's hope that that unfolds here in the next few months.
Canadian and U.S. industry are pretty flexible. Do you think they can jump into this virus story pretty fast and start producing the kind of medical equipment that's needed right now?
About an expert at that, I really don't know if they can or can't. You have to ask somebody who's in the manufacturing. So I know they just instituted that defense guideline. I forget the name of the act. Back it was in 1950s that it was created that allows the U.S. government to coerce private manufacturers to produce wartime materials. How fast they can produce it, I really don't know, Jim. So we're going to have to wait and see. You have to ask somebody in the manufacturing industry. But I think they're pretty pressured and motivated, so perhaps it could happen quickly. They want more respirators and more masks, I guess. I guess that's what it's all about, right?
Exactly.
Yeah.
Well, I just look at what Canada and the U.S. did when World War II started, how car plants were cranking out airplanes and tanks almost instantly. When we put our minds to it, we're pretty productive and pretty innovative.
Necessity is the mother of invention, right?
We'll have more with Mark Leibovit right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with Mark Leibovit. Mark, on Sunday, the Fed dropped the Fed rate by a full percentage point to 0. Is this good or a bad move for the U.S. economy?
Well, I'm not so happy about zero interest rates. I mean, look what it did or didn't do in Europe. I mean, we had zero rates there and negative rates, and they struggled for the longest time. So it's not lower interest rates. You need to have demand, and that comes from now they're printing money. I guess he's what Ben Bernanke used to refer to as helicopter money. Now they're talking about giving everybody $1,000 or $2,000 or a lot more money. So demand is what we really need, and I guess it's more fiscal stimulus, than Federal Reserve type stimulus, monetary stimulus, is really, I think, what's needed. So I'm not so impressed that rates are really the answer. Of course, the Fed's got a lot of tools. They got the quantitative easing, and something we really haven't talked about, nobody is really talking about, is the old plunge protection team. Where is that? I mean, the plunge, maybe they've been at work here, and maybe if they hadn't been at work, it would have been worse. But Ronald Reagan created that. I think it was Executive Order 12684, the Working Group of Financial Markets, back in November 1987, and they have the power, much as Japan now does, with the ability to go in and they buy stocks and ETFs over there. The government has the ability to go in and buy the S&P, buy Apple Computer, buy anything they want. And whether they've been doing that or not, is really an interesting question. But I think if they want to get the markets moving and confidence back, I guess they can't do it without some story. Why the market would just turn up several thousand points if something hasn't happened with the virus. But perhaps if something does materialize, I would think the old plunge protection team will be in there and maybe encourage things along a bit. So that's really my focus on the Federal Reserve side. I think that's where the power really lies in getting the markets moving again.
Can quantitative easing help in returning prosperity to America?
Well, it certainly puts money in the hands of those who want to play the markets, whether it's going to return prosperity to America or not. I mean, those who like quantitative easing, and the ability of the Fed to constantly buy bonds and sell bonds at their will, and that gives liquidity to Goldman Sachs and to Morgan Stanley and all the hedge funds and everybody else that is looking for liquidity. It's a plus, but I don't know if I guess if you're going to turn the markets higher and you want to argue that returns prosperity to America, I guess that would be a logical connection. But I don't see quantitative easing as the key. I think it's just a stabilizing factor for the banks and the big money players.
We'll have more with Mark Leibovit right after the break.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're chatting with Mark Leibovit. Mark, what are your thoughts on the U.S. dollar this week?
Well, the charts are bullish, Jim. So we got to go with the charts, right? I mean, they've been bumping away, and apparently, the markets like the U.S. dollar. I mean, the vehicle that I use is the ETF UUP, which surged up to over $29. I think it got a little overbought here. It ran up a little bit too far, too fast, but with the U.S. leading the way here, with all the stimulus and programs, I still see the dollar. I don't see any reason why the dollar would collapse here. It's a little extended, though, but I was, this 99 level, 100 level in the dollar, I think is okay. I'm not a big buyer of it here as a trader, but it definitely has been positive. There's nothing that says it's negative yet, and perhaps. Listen, it's been positive for the last couple of years. I mean, ever since Trump took office. I mean, it's been basically positive, so I don't see any reason why that would change. So I would say remain positive on it for now.
Is the Canadian dollar in a bear market?
I would say so, based on the action of gold and silver and crude oil. But the action in the Canadian dollar, as you know, has been sort of bearish for a long time. It's not something that just started. I mean, we had a huge sell-off. It sold off with the U.S. equity market. But if you look back, as you know, the Canadian dollar, it topped out there way back in 2011. It's been in a downtrend pretty much ever since, zigzagging along the way. So it's been in a bear market for since gold topped out, essentially. I mean, I'm just looking at the chart here. So, bear markets turn into bull markets again, but I don't see, confirmation of a bottom yet. So, Canadian dollar is still, it likes that 60-cent level. Maybe that's where it's going to head to.
Is Canada's economy in trouble?
If crude oil doesn't recover and if gold doesn't recover, those are, natural resources is really the Canadian mainstay. I can't believe they won't recover at some point. They're just cyclical like anything else. Temporarily in trouble, yes. That would be the answer,
Is crude oil getting hit due to fundamentals or just market psychology?
Oh, it's got to be fundamentals. I mean, you've got China and Russia and Saudi Arabia at each other's throats here for one reason or another. So it's a bunch of children playing with their egos and with their pocketbooks, and and also, I guess you can employ the conspiracy theory a little bit that they're trying to get the U.S. knocked out with fracking and Canadian markets. They were competitors of theirs out of business, so I guess I don't think they've been successful yet. They're certainly trying to be. So it's definitely a fundamental game. And I'm not to say there's nobody out there hitting crude oil futures and playing with the market and playing with the paper market. But there was a real story behind this. So, but like anything else, it's temporary. We've seen crude oil all over the place in the last 25, 30 years, from 10, 12 bucks up to 140, back down to 20 and 30, back up to 60, 70, 80. It's all over the place. Crude oil is coming back. This is just a bad moment in time for crude oil due to the news environment and due to the virus.
Is it a danger for countries like Russia and Saudi Arabia to try to play an economic war with the U.S. or have aggressive tactics like this?
I think so. I mean, we're the economic engine of the world, and China's only where they are because of the business that we brought them, and Russia is not really as big as people think they are economically. Actually, they're lower on the totem pole than most people realize. So definitely, it's not to their advantage. They thought they were playing a game. I think it's not going to work out for them, and ultimately they suffer as well. Their crude oil prices are down, metal prices are down. Weren't they better off just leaving everything alone? Everybody's making money. U.S. is making money. I guess they got greedy and want more of the market, and it hurt them as well as it's hurting us. So I think ultimately it's not to their favor to be doing this.
Could this market downturn be the beginning of the end for cryptocurrencies?
Some argue it could be the beginning of a big impetus to cryptocurrencies because there's concern about there's a war on cash going on. Banks are closing here. I don't know if they're closing in Canada. We can't visibly go into the banks. If you want to get cash, it's going to be harder to get cash. They're trying to get rid of cash. They want to control everybody and monitor everybody. And, there's a crisis around the world, but you can move and, perform economic transactions on the internet. It would seem to me that the crypto world, should thrive at this time. I know this past week Bitcoin had a little bit, well, not this past week, the last day or two, Bitcoin had a little bit of a rally. Whether it's a turn or not, I can't say, but I know the prevailing view is that governments hate the cryptocurrencies. They're going to get rid of them at some point. They're competition, that they want to create their own cryptocurrency as a way to eliminate cash and track people and get rid of all the competitors out there. But I know, things start slow. People don't believe that the Bitcoin and the crypto world is for real. It's been around. It's surviving. It's growing. I don't see it at the end at all. Maybe Bitcoin is not the way to play it. Maybe there's other cryptos out there, but I'm not a big bear on it. I just think it's an emerging trend, which, a lot of people are dubious, skeptical about. Of course, a lot of people traded it, made a lot of money. Other people got burned, but it doesn't mean it's not a viable alternative to conventional, monetary transactions. So I'm not a pessimist.
Do you find that when governments try to crack down on cash, people start trading face-to-face in other ways? Maybe beanie bunnies will become the underground currency, or just straight out swapping back and forth and cutting the government out of the loop.
Yeah, I would agree with you. Barter would be an alternative, certainly. If you've got physical metals in small denominations, gold, silver, and people, get comfortable with transacting that would be an alternative. But, I just think it takes away our freedom. Whether we're going to win that fight or not, I can't say. I'm a big believer that cash is it's like having the Second Amendment here in the U.S. The privilege of owning a gun that's been provided to us, or freedom of speech. It's something that it's another freedom they want to take away, and I would be I'm not a believer in that at all, and I would defend our right as best I could that we should maintain the ability to do as we want with our money and not be tracked moment to moment, which is what I think the powers that be want to see happen. So if it happens, it's to all our detriment.
Could we see bank closures or banks going under in North America?
I guess we could, but I think the government would bail them out because they're not going to let it happen. They're already talking about giving people cash for losing their daily income. So they bailed out the banks back in 2008, 9, and though they said they wouldn't do it again, there's an atmosphere of desperation now and panic, and they're trying to calm it down. The last thing they need now is bank failures on top of a virus and on top of people losing their jobs and restaurants being closed and curfews being imposed. So I guess some banks may be in trouble, but I would think the government would step in as they did before, Jim.
Which sectors are you watching closely this week?
Particularly the metals, because I was looking for a correction in the metals, and they came down. I was sort of scoffed at. I do like a little piece for Kitco every week. They ask you if you're bull, bear, or neutral, and I've been telling them that gold was overvalued. It was up towards 1,700, and my work said it should be trading in the 1,400s. And they put some comment in there about how I felt. I forgot the exact phrase. I was going to try to pull it up before this interview, but it sort of made fun of my comment that we could pull back into the 1400s, and here we are. So, it's like anything else when liquidation occurs, it happens to gold and silver just as it does to stocks, and it doesn't become a hedge or an inverse play, as so many people believe. So I thought we needed to pull back. And also I wasn't so sure if this big rally in gold that started was the beginning of the big move that all the gold bugs have been waiting and hoping for. I know in Canada and in other currencies, gold made all-time highs. It didn't make it in the U.S. dollar. But bottom line is we had a bit of a shakeout, which I was looking for. So I think there's a long side opportunity here unfolding, and watching that very carefully in terms of just one sector. And of course, I've been trading the market a little bit. The indexes, when I see they sell it off too much, there's always these technical bounces. And we've done pretty well buying names like Disney and Tesla, which I mentioned earlier, and some other names that got slammed here. So this is really the most fun time in the markets for me personally. I mean, I guess maybe I'm a bear down heart somewhere, because I seem to do better in big bear markets. I seem to like the big sell-offs because you make more money when they go down faster, and then there's big bargains that you can trade when they're down. So I enjoyed the crash in '87, when most people didn't, and I saw the great opportunities and trading opportunities. 2008, 9, same thing. It was, and even before that, after 9/11, there was a big opportunity. So this is great. This is a great time to be in the markets in terms of opportunity. And I got off on a tangent a little bit because you want to know what else I was looking at. But the metals for sure. Crude oil, we talked about this momentarily ago, is way overdone to the downside. A little bit of a technical rally underway here. I don't know if it's over or not, but that's certainly tradable. And outside of that, just some individual stocks that I mentioned.
Mark, how can people find out more about the Leibovit VR newsletters? Just
go to VR, like Victor Robert, VRtrader.com, and sign up. We got a bunch of newsletters, and we're happy to have you on board. And it's pretty easy to find, VRtrader.com. And thank you again for having me on your show.
Well, Mark, you're new to HowStreet.com, but for people who've watched PBS and other financial news outlets, you've been on this for a long time. You and Mr. Lewis.
Rukeyser.
Rukeyser. You were on his show as one of his trading elves, and I thought that was interesting, and I'm really proud to have you on this show.
Well, thank you for having me. Yeah, I've been around the block a little bit, doing radio and TV stuff over the years as a commentator and newsletter writer, and this is a privilege too to talk to one of my favorite audiences, the Vancouver audience, which I see every year at the World Outlook Conference, courtesy of Michael Campbell. So thank you for having me.
My guest has been Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as VRTrader.com. He was the #1 U.S. stock market timer in the January 2020 edition of Timer Digest. He was speaking to us from Arizona. If you have any questions for Mark or any of our other guests, you can send them to info@HowStreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.